wild week of bullion-related news as continued Trump tariff threats have sent the precious metals markets into a historically high state of disequilibrium with potential tariffs unknown tomorrow. This afternoon, Reuters reported that coming Trump tariffs would begin March 1, 2025, citing some anonymous three people familiar with the planning. At the very least, they did state the tariff situation remained fluid with no decision final until Trump makes a public announcement. And then this happened.
Friends at Reuters are reporting that the president has made a decision on the Canada and Mexico tariffs, but that they won't actually be implemented until March 1st. I was wondering if you could confirm that and talk through some of the president's thinking.
I saw that report and it is false. I was just with the president in the Oval Office, and I can confirm that tomorrow, the February 1st deadline that President Trump put into place at a statement several weeks ago continues. The president will be implementing tomorrow a 25% tariffs on Mexico, 25% tariffs on Canada, and a 10% tariff on China for the illegal fentanyl that they have sourced and allowed to distribute into our country, which has killed tens of millions of Americans. These are promises made and promises kept by the president.
The president yesterday said that last night he was planning to discuss whether an exemption would be made on oil imports. Do you have any information on what decision he made there, or will there be exemptions at all offered under this?
I don't have an update or readout for you on the exemptions, but those tariffs will be for public consumption in about 24 hours tomorrow, so you can read them then.
But eventually we're going to put tariffs on chips. We're going to put tariffs on oil and gas. That'll happen fairly soon. I think around the 18th of February. And we're going to put a lot of tariffs on steel. We already have tariffs on steel, and we've saved our steel industry, but that was relatively small compared to what it'll be. But we're going to be putting tariffs on steel and aluminum and ultimately copper. Copper will take a little bit longer, and that'll happen pretty quickly. It'll mean it'll be a great boost for our steel industry. It'll make our steel industry very strong.
So now even imported copper has upcoming tariffs. COMEX data points to not merely silver and gold inventories swelling after Trump's November 2024 win, but also a doubling of COMEX copper inventories, which all but occurred just before he even secured his second term. COMEX gold and silver inventories continue climbing higher. Here's a breakdown of COMEX gold eligible and registered inventories, both climbing sharply of late, rising by a combined near 13 million ounces over the last few months. On the COMEX silver inventory side of this ongoing story, most of the recent few months' climb have been in the eligible not-for-delivery silver stockpiles rising, the lighter green line. Cynically, I doubted imported silver and gold would get hit with tariffs and chalked this story up to an arbitrage profit trade. But after hearing the U.S. president today, maybe not. Bullion market onlookers are for the most part sharing that same feeling. Nearly 500 polled here today. Over 60% think there will be no gold or silver exemption news tomorrow, Saturday, February 1st. In other words, gold and silver will be tariffed. If so, domestic refiners and miners of silver in the United States particularly will have their hands full, as almost half the silver that the USA imports comes from Mexico. And we typically import about 4 to 5 times the amount of silver we produce internally to meet ongoing internal silver demands. The tariff exclusion list tomorrow might perhaps be tectonically bullion market shaking, so stay tuned. Tuning to bullion market chaos over the pond in England. Even the, quote, gold shortage headlines above the fold in the FT yesterday, the world's self-proclaimed leading gold market maker, it was a pretty bad week in terms of branding, to say the least, for London. The most important point of the headlines being the worldwide reported wait to withdraw gold bullion stored in the Bank of England. Not merely a few business days as under normal market conditions, it has ballooned out to delays of 1 to 2 months to withdraw gold from the world's oldest central bank and gold depository. The current governor of the Bank of England was asked on Wednesday, January 19, 2025, about the building bullion withdrawal delay story. Have a listen to what he said.
Can I move on to a second question on the international scene? Now, obviously, I think you've sort of collectively said there's a degree of uncertainty over what US friends will be doing. But we've seen some really tangible changes. This 82 billion of gold that's been shipped to New York, that the traders are waiting several weeks now rather than a few days to access their gold. And my question on the 82 billion stockpile in New York of gold and the changes in behaviours we're seeing in anticipation of tariffs or not, how do you view that?
Well, I don't really. Please, I mean, this is not a big thing, really, I think. I mean, it may be, first of all, of course, gold doesn't play the role it used to play. So if we'd been having this discussion 100 years ago, we'd have been in some very different world because we were on the gold standard. We're not on the gold standard anymore. So it doesn't have a significance for policy in that sense. There may be some, as you're implying, some anticipation of some effects around tariffs or not. I don't know. What I would say is that London actually remains the major gold market in the world. It's the world's leading gold market. If you're involved in that market and you want to trade or use your gold, you really need to have it in London. So gold does flow in and out of London, though. We'll see, but I don't want to sort of, in a sense, dramatise this story because, so gold does move and it doesn't play the role it used to play.
The gold industry's current estimated float or available gold inventories at the Bank of England at the end of 2024 was estimated at just over 1,100 metric tons, or about 36 million ounces of gold. A shortfall in London OTC markets when measured against an estimated 380 million ounces of outstanding spot cash gold contracts from data in London this week. The delays effectively constitute technical defaults on these contracts as sellers cannot meet delivery timelines reduced to these delays. This current situation challenges the fundamental premise of London's spot gold market, where contracts traditionally guarantee prompt delivery, but a 4 to 8 week delay indicates sellers are operating on a just-in-time inventory model rather than maintaining physical reserves, relying on global refiners to convert scrap or mine gold into LBMA approved or COMEX approved gold bars. And given U.S. political uncertainty driving continued demand for COMEX deliveries ongoing, further strains could intensify and further pressure global gold prices and expose deeper discrepancies between myriad outsized outstanding paper claims versus underlying available for delivery physical holdings in prompt time. The LBMA's 4-week reporting lag on vault data compounds transparency issues, leaving markets navigating this crisis with incomplete information and continued murkiness. In other words, there's no telling of yet how much of the latest ramp in COMEX gold inventories came from this estimated Bank of England float either. The largest first delivery day ever reported on the COMEX, it's obvious that high net worth investors in the United States are looking to pull gold bullion ahead of potential oncoming tariffs. The bullion over bonds trade appears to have gone beyond merely record central bank gold bullion reserve buying the last 3 years running. Meanwhile, our government continues spending at unprecedentedly high levels. For those of you who have been following our channel over the last 3 years, you can't say we didn't warn you. As a matter of fact, even longtime London gold trader Peter Hambro warned us all back in the summer of 2022. I'm going to leave a link to that important video warning in the show notes below in case you missed it. Go have a look at that after this video. But before we break, I'm going to leave you with this smoking gun to ponder in terms of ongoing gold price data throughout this full fiat currency era. Ever since the Bank of England's LBMA came about in 1987, the ongoing blue Eastern gold price data outside of London PM and AM fix hours diverged sharply upwards and has since ballooned to now nearly 42,000 an ounce, price data ongoing. All while spot gold is still hovering around only 2,800 an ounce. And starting in 1970 at just over 35 an ounce, the price of gold traded between the London AM and PM fix has whittled down to $2.31 an ounce. Ongoing. This is the most important gold market disequilibrium to consider. My question and thought is, how much longer can it last? Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
What's better than an ounce of free silver? How about 500? Get ready for another monster-sized giveaway with the SD Bullion Monster Box Sweepstakes, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box. This highly detailed piece of silver is a beautiful addition to any collection, and it features a hidden inscription on one of the tree branches that changes every year. So don't miss out on this exciting silver giveaway from SD Bullion, because someone has to win it, and it might just be you. Click the link below for your chance to win.
Silver and gold markets traded upward with strength this week. The spot silver price closed at $31.29 an ounce bid in fiat US dollars. The spot gold price finished the week and month at a new record nominal price high, ending just under $2,800 an ounce bid. The spot gold silver ratio remains still stubbornly high, closing at 89. Now, for any of you out there looking to acquire silver bullion, no promises how long this offer is going to last. While there's plenty of news and headlines buzzing around potential blanket tariffs to hit Canada and Mexico tomorrow, Saturday, February 1st, 2025. And while we're not aware of what's going to happen more than anyone else out there, what we do know is the anticipation of tariffs has really disrupted the bullion industry. Therefore, we went ahead and acquired a good amount of Canadian silver maple leaf coins at a good rate ahead of this coming deadline. As always, we're trying to pass along those savings to our customers. Those who are buying bulk silver maple leaf coins can get them priced cheaper now than most silver rounds. Obviously, we can't keep prices this low for too long, and there's a limited quantity at this price, so move on it now if you have interest. I'm going to leave a link in the show notes on the deal. The LBMA again published gold and silver analyst price guesses for 2025. Looking forward, they were markedly mostly bearish and way too low in their 2024 guesswork, if you remember, to last year. Their gold guesses for 2025 range from the lowest low call of $2,250 an ounce to a nearly $3,300 an ounce price high forecast on the year. The high guess is by an analyst who won last year's guesswork, so we'll see how it goes for this year. On the silver side of their 2025 guesswork, the lowest low is 24 an ounce, with the highest high for silver of their collective calls at 43 an ounce high. Regarding great ongoing supply-demand fundamentals in the silver market, this visual did a rather good job this week of illustrating the ramp in silver demand following the 2020 pandemic. Industrial silver demand has grown by 55% since 2015 and is projected to be over 710 million ounces this year, 2025 alone. And this week, the Silver Institute estimated another global silver supply deficit for 2025, estimating ongoing global demand for silver inputs will outstrip new mined and recycled silver supplies by negative 149 million ounces in 2025. Now, if we consider unsecured silver ETF inflows positive and negative, take into account over the last more than handful of years, this would be the 7th year running with demand outstripping supply in the global silver market. TD's senior commodity analyst was back in the news this week with notes on the silver market, citing the potential for a momentum long pile into silver, looking for a potential pronounced break north of $31.55 an ounce. Of course, gold and silver tariff news tomorrow will likely play a major part in how the precious metals markets open and trade throughout next week. Now, tariffs or not, premiums this low on Canadian silver maple leaf bullion coins don't last long, so get yours while they last. Check the show notes below, and I'll see you next week. That's going to be all for our weekly SD Bullion market update. As always, to you out there, take good care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.